Hi, I'm Brandon Poe, founder of Poe Group Advisors and creator of the Accounting Practice Academy. You are listening to the Accountant's Flight Plan podcast, where we talk about stuff in the accounting world. If you're looking to buy or sell a practice, we are the premier accounting practice intermediary firm in the industry. Check us out at pogroupadvisors.com. If you're a firm owner looking to build a more profitable practice while actually reducing owner hours, sign up for our practice management workshop, which only runs a few times per year. Learn more at accountingpracticeacademy.com. Welcome to the Accountant's Flight Plan podcast. I'm pleased to introduce to you Andrea MacDonald. Andrea recently purchased a firm through Poe Group Advisors, and we invited her on to share her experience, a little bit about her. She is a CPA and founder and CEO of ProTax and Accounting LLC, a virtual accounting practice based in Chesapeake, Virginia, with a focus on micro businesses, which we're going to get into that. Andrea's passion is to provide the business owners she works with the peace of mind of knowing their financial life is in order. In addition to offering accounting services, she also offers bookkeeper mentorship, helping newbie bookkeepers to expand their technical accounting skills. Andrea has completed 2 acquisitions over the years, with the most recent being a virtual accounting firm in May of 2023. So
yes. Hello, I'm excited to be here.
Well, thanks again, and we'll just get right into it. So I always like to share with our listeners like how my guests chose accounting. How did you choose to be a CPA?
Yeah, I had a really roundabout path to the CPA, definitely non-traditional. I got married and had kids and then went to college, which is completely backwards. I was originally a nursing major, and as part of my degree program, I took an accounting class, and that accounting 101, it was like fireworks, bells and whistles, everything just clicked. I knew right then that nursing was not for me, and that something to do with accounting or business was going to be the way to go. And so I changed my major to business. And then I went on to get an MBA and a master's in accounting. And after I did all of that, then I decided, maybe that little CPA credential makes sense, and maybe it's something I should do. I am not a good studier, so it took me a long time to pass all the tests, but I finally did. I think I got my license in January of 2018, I believe. So I've been a licensed CPA for 5 years now. So not quite as long as some others, definitely not the traditional path, but I love accounting. I love working with small business owners. Talking to people about their businesses fills my cup. And so I get to do that every day.
Well, and you're not taking it slow. You're like buying 2 firms, boom, ramping it up, making it happen.
Yeah.
That's awesome. I mentioned in your bio micro businesses. So tell me that first of all, what is a micro business?
Sure. So in our practice, we define a micro business as a company that earns typically $2 million in revenue or under, but the majority of our clients are under $1 million. So they are very small businesses. I think, the SBA defines small business as like $25 million and under. Woo, for us, that would be a huge client. We wouldn't even know what to do with them. We focus on businesses that bring in $1 million or less in revenue. And that kind of became a focus because when I started my firm, I really planned to be a practicing accountant. I hadn't planned to grow a huge firm with a lot of staff. I like doing the work and I like working with the people. So essentially I created a job for myself. And when you're a solo operator, you kind of have to be careful not to bite off more than you can chew. So I felt like business owners that were in positions similar to my business were a group that I could really connect with. And that's been true. I have found that businesses in that range, the owners wear 17 hats. They're trying to do everything, sometimes on a shoestring budget. They're not an attractive potential client for the larger accounting firms. So for firms like mine, it creates this really nice pool of potential clients. And so focusing on them means that I offer accounting services that are generally more affordable than what larger accounting firms charge, but it keeps me connected with these people who are still usually, hopefully, passionate about their businesses. They're having some kind of major pain point or stressor. And there's something so rewarding about being able to walk into a discovery meeting and hear all of their pains, understand all of their pains, and be able to solve all of their pains all in the span of a 1 hour meeting. It's intoxicating. I leave every discovery meeting with like a renewed passion. And I can't think of any other type of client. I don't think I would get that same rewarding feeling from working with a large company that can afford a whole accounting team and, advisors. So that was my focus early on, and it has stayed my focus.
And you're able to give them, it sounds like, insights and maybe a light advisory type of experience where you can see that you're making a real difference in their business and perhaps their lives. And I wish that, our listeners have heard me say this, like, I wish all accountants would sort of adopt this more advisory type model, because I find that so many clients are, first of all, especially in that size, when they think of a CPA, they think that's the type of service they should get. They don't want to just have their taxes done. They want to know what the accountant thinks, like from the financial perspective, what can I do to make things better? And I feel like a lot of the profession doesn't meet that expectation. Not only do they not meet it, they don't even express that that's not what you're getting. You're getting a tax return, or you're not getting that level of service. Do you find that that's true, that there's a bit of a mismatch in the expectation of clients from CPAs versus the actual experience most clients have?
Yeah, and I think there's a couple things going on there. So one is clients want all these services, but they don't necessarily want to pay for them, right? So if you want to pay for a tax return, you're going to get a tax return. You're going to get a reactive service that doesn't include any forward-looking insights. Being able to offer those services means we have to charge a little more. So over the years, I've had to kind of pivot who my ideal client is and how we price our services, so that we can it's a delicate balance, right? Staying affordable enough for these very small businesses to afford working with us, but charging enough that I can have the time to provide those type of insights. And that's the beauty of staying a nice, small kind of boutique style firm, is that we don't need 1,000 clients to be successful, or what I deem to be successful. We can have 200 clients and have a very successful practice where clients get touch points several times a year. And the number of touch points varies by client. Some people don't want to hear from us every quarter. Some clients are just content. They're happy. They're at ease. They can sleep at night knowing they have tax ready books that are completely accurate, and they're going to have great tax returns, right? And a little bit of, forward looking, in that we can tell them how much their quarterly estimated tax payment should be, so they don't have a big tax hit at tax time. That's probably our lowest level client, right? Tax ready books, tax estimates, no surprises during tax season. And then it ranges all the way to, they want help with accounts payable, accounts receivable, setting, payment terms, setting collection terms, all different types of accounting services. Some people want, monthly review of tax projections. So we kind of run the gamut between, we're going to talk to you twice a year and you'll have good, clean books, to we're going to be talking with you every month. We're going to be looking at your numbers every week, and then everything in between. So I think the big disconnect is, or at least if you're talking to accountants, you'll hear that the big disconnect is people say they want all this service, but they don't want to pay for it. In my mind, that just meant that I had to figure out how to build a practice that I could offer those things at a price that people can afford, but that I can afford to live on, right? It's easy to get stuck on that hamster wheel where you have thousands of clients, and so nobody gets any kind of personalized attention, but you have to have that many clients to make enough money to pay your bills. And so I would say that I was kind of on that path for a while, and finally realized that that's not sustainable. My health was in jeopardy. My team's health was in jeopardy. And so we made a pretty big pivot. And that pivot is what led me to even being in a position to acquire another firm. So I'm super excited about what we have going on here.
That's awesome. Well, and I like that it's clear from the client's perspective, it's clear what package they're on and what they're getting. Like, there's no guesswork on their part. And I think that's something that a lot of accountants could probably learn from. So let's talk about why you decided to buy. So you made the pivot. I'm guessing you sort of got really super focused on who you were and who you wanted to serve and how much you wanted to charge. You had a business model basically figured out, it sounds like.
Yep.
And so at what point you go, okay, it's time to acquire?
So once I decided I don't just want to be a practicing accountant, I actually want to be an accounting firm owner. That meant I had to get really serious about, finding good staff, onboarding clients in a smart way so that the work could be delegated. I'm still kind of learning that, but I've come a long way. And so once I made that decision and started putting a team in place, then I had to decide, do I want to grow organically through, normal networking and normal sales channels? Or do I kind of want to hyper accelerate that growth through an acquisition? I'm super ambitious, sometimes maybe a little too ambitious, but I got in my head that acquisition was going to be the right move for me. And so I took time to sit down and really think about what type of firm I would want to acquire. What about my firm did I really love and what did I not love? And so I started looking at practice profiles. I don't know how many practice profiles I requested. Enough that your team probably rolled their eyes whenever they saw my name come through with a request. But, I had a really specific set of criteria because, again, I'd figured some of these things out and I didn't want to backtrack my progress with an acquisition that didn't fit. Luckily, I found one and it's been good. We'll talk about that in a minute, but yeah, it was kind of like this is a good way potentially to accelerate my growth.
And I think it's smart to look at a lot of profiles. You're not alone in that. And, we find that like you shouldn't expect every deal that crosses your desk to be a fit. Like it's highly unlikely that it will be. So you have to look at a lot of deals to find one that's right for you. And sort of sometimes by looking at them, you find what you don't want, right? Mm-hmm. Like sometimes you didn't know you didn't want that until you see it. You go, oh, I don't want that. Did you have that sort of experience? Was it sort of like in some ways, a process of elimination?
Yeah. I mean, I didn't see any profiles come across my desk that I was horrified. Like, there's no way in heck this would work. But it was little things like we had pivoted to being virtual prior to COVID, but COVID really forced our last few holdouts to understand that we were no longer meeting in the office. And so I didn't want to go backwards to a firm that was brick and mortar. I was looking for a 100% virtual practice. I didn't want to have to acclimate another set of clients to working virtually when they weren't used to it. So for me, that was a big one. That was the first thing I looked at, virtual or had a physical location. And then I looked at, owner hours. I already have a firm that takes up full time. I didn't think I had it in me to take on another firm that someone was working in full time. So I was looking for a firm that had some structure already in place. So I looked at number of owner hours, right? Lower owner hours was appealing to me. And so those were probably the two main criteria. And then from there, I looked at, client mix. We work primarily with clients who are in service-based businesses. I don't really deal with manufacturing. I don't deal with a whole lot of restaurants. I don't deal with a whole lot of inventory. And so I knew if it was a business that was heavy in those areas, it probably wouldn't work. So we looked at client mix. I looked at, in some cases, the full profiles went into detail about their pricing modality or, their pricing structure. So I had moved to everything being subscription based, including tax. And so I was curious to know if there were firms out there who were doing that. There weren't many, but there were a few. And so that was a check in the pro box. So it was kind of a bunch of different factors that I looked at. Again, there weren't any that I was like, no way. There were some that, checked 3 out of the 4 boxes or, 5 out of the 10 boxes.
Yeah.
But the one that I ended up, there were 2 actually that I met with and made offers on. The first one, she did not accept my offer. She accepted another offer, which it was a competitive, I will say the firms that met the criteria that I was looking for, it was kind of a competitive environment. And then the second one, once I spoke with the seller on the phone, again, it was that same like fireworks and light bulbs. And we just really jived. Our tech stacks were similar. Our leadership styles were similar. Our client mix was similar. It just felt like this is the one. And that's the one that ended up working out. So
awesome. Yeah. And we love it when it fits like that. Like it should, that's what you want.
It took time though. It took sifting through a bunch of different profiles and waiting patiently for the right one.
Yeah. Well, talk about financing, because I know in our deal, I think we had a few hiccups on that side of things. And, it's dealing with the SBA. We always let buyers know, like, it's an onerous process sometimes. And and with our lenders, we always try to get them to come to a fast no. And I don't think that was necessarily your experience. Like, it's better to get a quick no so you can move on than it is to get a dragged out no. So, tell us a little bit about your experience with that and maybe some do's and don'ts when it comes to financing.
So I originally worked with a banker that I knew in my network, just through networking. She and I had referred clients back and forth. So when it came time for me to need a loan, she was my first go-to. I was really pleased in the beginning. The upload, here's the list of documents to get a pre-approval. I had the pre-approval really quickly. So I actually had a pre-approval in place before I even made an offer on either practice that I offered on. So that part was already done. I already knew how much I could spend. I knew exactly what I could offer. I knew exactly sort of what my payment would be. So then I made the offer to the seller that I ended up acquiring the firm for. I got the ball rolling with my lender, like, all right, here's the written offer. She accepted it. Here's the executed offer. Let's get the ball rolling. And that was end of November, early December of 2022. We went through the process, collected more documents, everything I turned around, within 24 to 48 hours. The seller was super responsive. Everything I asked of her, she got back to me within 24 to 48 hours. Stephanie, the broker at Poe Group we worked with, super responsive. Like, we were doing our part, and the lender just dragged on and on. She could never give me any really clear explanation of why. It finally got to March. So now we've been at this, I got pre-approval last August, offer accepted end of November, early December, and now we're in March, and we are no closer to submitting a package. The seller and I were trying to get the deal done by the beginning of tax season. So now we're 2 months beyond our goal. And so finally I reached out to my accounting firm owning community and said, hey, I might need to switch lenders. Who do you have? And somebody sent me a name. I called that name. We closed the deal 47 days later. So I dragged it out for 4 months longer than maybe I should have, because I was trying to make this deal work. So I guess my biggest takeaway from that was, if you don't have a good feeling, or if you're not getting good responses from your banker, don't be afraid to pivot. We're accountants, so I don't need you to explain cash flow to me. I know what cash flow is. When I ask you how you're coming up with a number based on cash flow, it doesn't make sense to me. Don't just pat me on the head and, send me on my way. Like, I'm looking to have an actual, let's talk about the numbers discussion. So that, I wish I had made a change 2 or 3 months earlier, and then the deal would have closed sooner, but it ended up working out. We got past tax season, which turns out was a smart move. But yeah, my biggest takeaway is just, if you don't have warm fuzzies about your lender, don't be afraid to reach out to others. Until you sign that final paperwork, you're not locked into working with any one person.
Yeah. If you own a CPA practice, you're no stranger to the grind. It's easy to get so buried in work that you lose sight of the bigger picture. Oftentimes, in order to improve, we need to change our point of view. Accounting Practice Academy by Poe Group Advisors gives you that fresh perspective, so you can achieve success on your terms. This virtual workshop gives you the tools and mindsets to grow your bottom line and make your firm less owner dependent. You'll use your firm's data to zoom out and see your challenges and opportunities with amazing clarity. Most APA members come to realize that pruning their clients and doing less will actually generate more income. Poe Group Advisors has sold hundreds of accounting practices. We know that the firms that are the easiest to operate are also the most valuable ones in the marketplace. APA is the only workshop built from that mergers and acquisitions perspective, which means our members build more valuable practices. Create a better practice for you and your employees to enjoy, or build it to sell. The choice is yours.
Have you looked at your practice the way a buyer would? It's easy to lose sight of the bigger picture when buried in the finer details. With the lessons within our latest book, How to Prepare Your CPA Firm for a Sale, you'll learn to build upon your firm's success and make your firm more enjoyable for you and your staff or a future buyer. Go to pogroupadvisors.com/prepare for your free copy.
And we have a network of lenders that have a lot of experience with accounting practice lending. And so they understand the vertical, and that helps. A lot of times we've had the experience where a buyer goes to their local bank, they have a relationship just like you did, and they get a quick yes, but then when the underwriting happens at the end of the deal, it doesn't pass for whatever reason. And an experienced lender would have seen that reason right up front, and at least then you know what the obstacle might be and you can get past it. So, what you experienced is not terribly uncommon.
And what I found was that a lot of bankers are not comfortable financing on cash flow. When you're acquiring a 100% virtual firm, there are no assets, right? This is strictly a cash deal based entirely on cash flow. And I found a very big difference between bankers who understood that and bankers who are used to financing on hard assets, right? Like there's no building to acquire, there's no equipment. It's literally, they earned $900K in revenue last year. My offer is $900K. I want to finance based on the cash flow. And so I would say if you're talking to potential lenders, maybe ask about that up front, because some of them just cannot, it's either the lender or their underwriting. In the case of my banker, part of the delay was the underwriting could not get past the cash flow part of the deal. They were looking for assets to secure, and it's a virtual firm. Like we have some computers, that's it. They're not going to be worth the cost of the deal.
Right.
So finding a lender who understood that and who was comfortable with that risk made a huge difference.
Yeah. And a lot of times the way the lending works is the relationship manager, the banker, they want you to make that application and they want to pull you into the loan process. And so sometimes they'll tell you what you want to hear to get you in, and then you don't get the hard information until you get to the underwriting phase. So, transition. How long was your transition?
So I was really lucky. I structured my deal in the ways that people generally advise you not to. There was no earnout. It was a 100% at closing. And we did that for a few reasons. One, because again, it was a competitive environment and I needed to make a competitive offer. When you do a deal like that, though, you really, as the buyer, assume all the risk, right? The seller could get that check at closing and just walk away. But I was very fortunate. She was very involved. In fact, I just got an email from her yesterday. So the deal closed May 17th. We're now almost to September 17th, 4 months later. And she emailed me yesterday just to check in to see how things are going. So I was very fortunate that she was very involved. We worked very well together on getting everything turned over. There was a lot I wish I had thought of as far as how to merge those tech stacks. We were both using the same workflow software. We were both using QBO. We were both using Acuity for scheduling. Well, none of those software providers has a way to merge accounts on the back end. Those were things that we didn't think of. We didn't think to ask. And so it was a lot of manual moving of information from one account to the other to get them consolidated. And she was right in the thick of it with me. So I was very lucky. I've heard horror stories about people whose, sellers were not so involved or concerned. So I thank my lucky stars that I had the seller that I did. But some of that I feel like I figured out during the lead up process. The conversations that she and I had before I made an offer, I could really sense that she really cared about her team. She really cared about her clients. This was not an easy decision for her to make to sell her practice. And so, part of that was the due diligence that I did in choosing the seller that I chose. But a lot of it was also just plain dumb luck. She was just really amazing. Yeah. So it was a good 3.5 months probably to get everything transitioned over. The slowest one was our QuickBooks Online, because we were very hesitant to just go in and change a bunch of things. We still had to keep the work rolling. So that was the last piece. And we just got that done, I think 2 weeks ago, maybe 3 weeks ago. So it was a good, solid 3-month process.
Maybe those software providers will figure out how to merge these things a little more easily. You would think they would. I mean, the conversions like for tax software are pretty far along. Like they're way better than they used to be. But
yeah, I'm surprised.
Yeah. Well, that's good. So, what were some of the lessons that you learned from acquiring a firm?
I learned a lot around acquiring the team members. So in addition to things like make sure you understand the requirements to set up employment tax accounts in states you didn't previously operate. This acquisition brought team members in 3 states that I had not operated in before. And I didn't even think about all the employment tax accounts I'd have to open and how long that takes and how time consuming and how much effort it took. So I hadn't thought about that. And then just onboarding the team members themselves. The team, I call them my OG team, they knew we were going through an acquisition, but the seller's team did not. She didn't tell them until the deal was done for many very valid reasons, right? Like I would never, based on my experience, I'm glad she didn't tell them. But they found out the day of closing, and of course they were all kind of shocked, and a couple of them were very vocal about their displeasure. So I hadn't really spent a lot of time worrying about how to navigate the different personalities. I was so excited and my team was excited. I just assumed everybody would be excited, and that was not the case. So that was a little bit of a minefield to work my way through. I still have all of the team members that came with the acquisition, but one. She quit about a month after, which is fine. I wish her well. So yeah, a lot around personnel management. I didn't have a handbook updated. I should have had that ready to go the day they all onboarded with me. Just little things like that. I hadn't thought through all of the policies that would have to change. I felt like the acquisition took so long to get over the finish line that we got kind of lackadaisical about figuring some of that stuff out. And then all of a sudden, boom, it was done. And I wasn't ready.
Yeah.
Things like making sure your workers' comp insurance covers people in other states. Mine did not. Hadn't even thought about that. Had to go get new workers' comp insurance. All the things that feel now like they were super obvious and should have been on my radar, but just weren't.
Yeah. Yeah. Just logistical things like that. And they're always surprises, and you never quite know which ones you're going to run into. And it is common, like I think, for buyers to be very focused on the closing process and the financing process and the due diligence process. And they're not thinking so much about the transition part and the thing that's actually going to make the integration successful. And so, yeah, and that's something we try to do as a company, is to bring that, some of those big picture items to the table and get you focused on them. But
and
you don't know.
Yeah. Stephanie, our business broker, did, to her credit, try to rein us in a few times, like, hey guys, you should be thinking about this. And we were just, I don't know, distracted. I'll say distracted, right? We were just distracted with a lot of little stuff. So to her credit, she did try to keep us on the right track.
Yeah.
We were kind of,
well, in the end it worked. In the end it worked out. So
it did. Yeah.
All as well. Would you have done anything differently?
I think I would have just, the things that I just mentioned that I wish I had known, if I could go back, I would have had those things. I would have had my ducks in order. I would have been ready to onboard the new team members with a beautiful welcome package and, the handbook already laid out, and we could have had a meeting to talk about me and how I operate and my expectations. I think that would be the only thing, just making the onboarding process for the personnel smoother, because they were already dealing with the shock of the sale. And then to have had me be a little bit disorganized in the onboarding I don't think it left them with a very good impression of my leadership skills. Fortunately, they stuck with me and it's worked out. I'm actually bringing everyone together in 3 weeks. We're going to have a 3-day long team retreat with everybody coming
nice
to my backyard. Got a big beach house and we're all going to be together. So they stuck by me, had a little faith that I would get my act together, and it finally happened. But yeah, I would just have been better prepared for the personnel piece.
I have a story to share on that. So years ago, my dentist sold his dental practice to a younger dentist, and I went in there the very first day, the first week after he closed on the practice, for a cleaning. And the hygienist I said, what do you think about your new owner, your new owner? And she's like, oh, well, I don't know. So I pulled him aside. I said, hey, I happy to take you to lunch one day. We could chat about your acquisition. And I think he thought I was trying to sell him something, which I wasn't. I was just trying to help him. And so we ended up going to lunch, and I talked him into like having like what you're talking about, like have a gathering, have people invite their families, like just get to know each other on a personal level. It's a game changer for transition. It gets everybody so much more comfortable. And I think it really helped him get everybody settled in and get everybody comfortable. And the only thing that makes staff comfortable is time spent with the owner and seeing how they do business. That's really what makes them comfortable.
I would agree. And that definitely echoes some of the feedback from the team members that came with the acquisition. I think that was their big concern, was that they had this great leadership before, and then I was going to come in and try to change things and make it like a typical accounting firm with a whole bunch of layers. And that's not what I'm doing. But they didn't know that. They just knew that all of a sudden their life was changing with no warning and really no say. I mean, everyone could have quit, right? Like everyone had a choice, but I guess I didn't anticipate the level of anxiety that it would cause for that team. And so that's something that if I go through another acquisition, and I suspect that I will, because this process was fun, I will be mindful of that next time.
Yeah. It's just getting them comfortable.
Yeah.
What are you most excited about as you're growing your firm? Like, what are you looking forward to right now?
So my favorite part, I think, about this acquisition was that things I was putting in place in my smaller practice, as far as structure, was also accelerated by the acquisition. I chose a seller that had a structure similar to what I was building. And so I got to just take what she had already done and plug it in, or really take my practice and plug it into what she had already built. So it got that structure in place way more quickly. And as we grow, and now I have a management team, so I'm not the only decision maker anymore. I'm still the sole owner, but I now have a team of people that I can look to for suggestions and to bounce ideas off of. So as we grow, just being able to lean on that structure, being able to remove myself from all of the day-to-day interaction with the clients so that I can focus on the business itself, right? Like the very thing we teach our clients about, working on your business instead of in it, I was very much in it. And this acquisition has actually allowed me to move to working on the business more quickly than if I had grown organically.
Yeah.
I'm really excited about that.
Probably forced you to do that a little bit, didn't it?
It really did, because I'll tell you, some of those team members held my feet to the fire. Like they want very clear leadership. And so I really had to get my wits about me and just, I don't know. I feel like I joke that now it's like a legit business. Not that it wasn't legit before, right? I had team, I had payroll, I had bills, everything got paid, I had clients, but it just feels like a really legit business now. I'm moving towards building a practice that maybe someday I'll want to sell my own practice. And then a seller or a buyer who is like me will be able to just step right in, and my team can continue doing what they do well. They won't have as much anxiety because they'll know that I've, set them up for success. So that's probably my favorite part. Just
nice.
Yeah. Being able to set my team members up for success, no matter what happens to me in the business. And I didn't have that before.
And the structure really was, my personal experience is I resist structure. Like I don't really like it. I like to be creative, and but you can't create the wheel every time once your business reaches a certain size. And so what I found though is now we have structure in our company, and it's really what sets you free as the owner. And it's the structure will set you free.
It does. And I learned that I love vacation, and I can actually take vacation now because I'm not the sole point of contact. But again, for me, it really comes back to knowing that the people who work with me, my team members, are going to be okay, even if something happens to me. That was a source of anxiety for me as a business owner before. If I walk out the front door and get hit by a bus, what was going to happen? Yeah. I had my fingers in everything. And now we're not 100% there yet, but I'm much closer to having a business where if something did happen to me, then the managers can run it. My husband, who would inherit my shares, can decide whether he wants to sell it or keep it. He would actually have an option. So that's probably my favorite part. Like, it's an actual business now.
Yeah. Well, we're about to wrap up here, but what advice do you have for someone at the beginning of their buying journey?
I would say get really clear on what you want, and then don't be afraid to request a whole bunch of practice profiles until you find it. And you may not find one that checks all the boxes, but the closer you can get, in my opinion, the happier you're going to be. I was pretty specific, and I spent a good 6 months, maybe longer, looking through profiles, just waiting and hoping that one came along that jived with what I was trying to accomplish. And it finally did. So yeah, just get really clear, kind of like you do in your practice where you want to get clear on what type of clients you want to service. Go through that same process, identify the things in your business that are working well, the things that aren't working well, and maybe you can use that to create your list of wants and needs when you're looking at other firms.
Yeah. And we have a lot of resources on our buyer resources page at Poe Group Advisors website for that, like the guide to choosing firms, a guide to evaluating firms. So if you're listening and you want some resources, check out our website.
And I can attest that those resources are great because I have been all over that site and have clicked on all of the information available. It's very helpful.
Awesome. Book. I love to get book recommendations from our podcast guests. Do you have a good book recommendation?
Yeah, it might be a little bit trite, but I keep coming back to it. So The E-Myth Revisited. I wish I had read that book 10 years ago. And essentially the premise is, just because you're a good operator in an industry doesn't mean you'll be a good business owner in that industry, right? Just because you're a good electrician doesn't mean you'll be a good electrical company owner. Just because you're a good accountant does not mean you'll be a good and successful accounting firm owner. I read that book probably, 5 or 6 years ago now. And it was another one of those aha moments, like, okay, this is why this isn't working, because I'm thinking like an accountant. I'm not thinking like a business owner. So it was pretty pivotal in my business. I mean, it's a 180 where I was with where I am now, just complete opposite direction. So The E-Myth Revisited would be my first recommendation.
Love it. Yeah. It's that mindset. The mindsets are so powerful. And you don't even realize what yours are until you sort of start to look at things from a different point of view and question your own assumptions. Agreed. Well, this has been great, Andrea. So if people want to find you online, what's the best way to connect with you?
Yeah, I am on Twitter at Andrea MacD CPA, and I'm on LinkedIn, Andrea MacDonald CPA. Also on email, but my email inbox stays full, so you're more likely to get me like through Twitter or LinkedIn. I'll know if you're a bot, so don't have your bot send me a message because I probably won't answer that. But yeah, I'd love for you to follow me, especially on Twitter. I try to post fun little tidbits of content, and we're in our, talking about our acquisition mode now. So there's a lot of those little bits going out there.
Awesome. Well, Thank you so much for joining us. It's been a pleasure.
Thanks, Brandon. I had so much fun.
Thanks for listening to the Accountant's Flight Plan podcast. If you like what you heard today, please follow us so that you can get updates when new episodes are released, and share our podcast with your friends and colleagues. You can also follow Poe Group Advisors on social media. Please visit our website for more information at PoeGroupAdvisors.com.